Hello everyone, welcome to a new video for Bitcoin price prediction based on Elliott wave analysis. Starting on the weekly chart here, we are looking at our cycle from the beginning of the impulse 1, 2, 3, 4 and 5. We are currently in the fifth waves, of course, on the weekly chart here, where we are expecting an all-time high above 120k probably, where we are expecting here a triple 1 2s and finishing a wave 3, 4 and a 5, and we are still expecting one more wave 4 and a 5, and of course one last wave 5 to finish this impulse towards the upside with triple 1 2s and triple 4 5s. Now, of course, there is a scenario which is bearish as well, where it might have finished already an impulse, where you probably have finished your wave for almost somewhere here with a WXY. You can see it much more clearly on the daily next, and you might have finished a 1, 2, 3, 4, and a 5. Finished impulse toward the upside and start looking for a bearish market after it. However, regarding the channeling, we are looking here at the price action still inside the acceleration channel, taken of course from your top of your wave 1 and the bottom of your wave 2, and based of course on your wave 3. We are looking here that the price action still inside this acceleration channel did not leave it yet, and signifying that we are still currently in an impulse toward the upside until of course we reach outside this acceleration channel. And regarding this acceleration channel as well, it might play also as a support for your next move towards the upside in case we reach of course lower prices and hit this acceleration channel lower part and start to move towards the upside, probably after of course hitting it. Breaking it, that is of course a bad signal. And as you can see that if in case we break this acceleration channel, we might get out of the support, which is the most important support that we have currently. If we break the support and the acceleration channel, that is a bad signal, and of course for the bullish definitely. And of course we are still now looking for lower prices for a bearish market. Now let's move to the daily chart. On the daily chart, we can see something here as a both scenario. I would say one is bullish and one is bearish. As I mentioned, we have the triple 1 2s here in a closer view, where you can see of course a triple 1 2s, and then of course finished a wave 3 in your white scenario. In this white scenario, of course, this is considered as your main impulse for the whole cycle, because of course when you have triple 1 2s, you have only one wave 3 and the others are just triple 4 5s. So this wave 3 basically, which is the main one where we can see the highest amount of volume as well in this wave 3, has been done and finished. And of course you would like to see again a high amount of volume for a higher price, as well as you can see here for your wave 5. So when you have of course like lower volume and higher price here, that means definitely this is your wave 5 finished already for the white scenario. And by finishing this 1, 2, 3, 4 and a 5, probably you are looking now to a B and a C as an expanding flat for your second wave 4 in orange scenario, which it should be of course ranging until the double time for a wave 2 in the orange scenario as well for your wave 2. So by all means, right now or today, we have passed the double time for a wave 2 here in the orange scenario to finish this correction, of course, and start to move towards the upside once we finish it totally, of course, internally on the 1 hour chart, which we are going to it right now after this daily. Now one more daily scenario, which is a bearish one, where you have finished this bull run, of course. In this bearish scenario, you have of course finished a longer wave 4 here, rather than finishing ABC here and starting 1 2 1 2 3 4 5 4 5. This time we have a W and then an X, both are zigzag, and your wave Y is a triangle ABCDE, finishing exactly in the middle of this triangle perfectly. And of course having breaking 1, 2, 3, 4, 5 as a contracting diagonal for your wave 1 here, and then a wave 2 which is very shallow, and then 3, 4, and a 5, finishing this impulse toward the upside, of course, with a finished wave 5. Somehow, of course, it doesn't look really nice here. Your wave 5, somehow it looks a little bit messy and not really looking nice as a finished impulse or ending diagonal. However, it's still a possibility, and that because, of course, the highest amount of volume that we saw here and there, and of course where we possibly have finished this correction in a longer. So after this, we have to consider that this might be your 1, 2, and then 1, 2, and then 3, 4, 5, probably, and then 4, 5 towards the downside. So this is, of course, your bearish market that it might start soon or later. Now, how we get the signal that we are in a bearish market or still in the bullish market? Of course, this is first your signal, which is this support, which is a very main support here at the 87,000 for Bitcoin. It is preferably that we don't break this toward the downside, because breaking this, of course, it will make the price just slice inside those prices like a knife in the butter, as we said before. It's gonna be very easy to break this. And don't forget that on the CME we have a gap here, which it has to be filled soon or later, and this might be the reason as well for a lower prices to come back to the 70,000 or 75,000, around these numbers. So basically, it is preferably that we don't break this level. Breaking this level will mean, of course, the start of the bearish market, while using it as a support and moving towards the upside means that we are still in the bullish market and we're looking for higher prices. So let's see much more closes on the 1 hour chart, what we're gonna have here. So on the 1 hour chart, as you can see, guys, we had before this scenario where we are finishing an A, B, and a C expanding flat, where you have 3 waves down here and then 3 waves up for your wave B, and then 1, 2, 3, 4, and a 5 for an ending diagonal for this expanding flat, where preferably to hit, of course, the 1.38 fib level, which is uncommon target at 90,800. The common target is at 1.618 for 88,000, which is very, very close to the area that we don't want to see it broken, in case you want to stay bullish for this, of course, cycle. In case that we break this, this bearish market will start, of course, and we have to be careful with it, because it might be very, very fast drop. Now, the things are like this. Whether we have topped here, of course, for our bearish scenario, and we have started a 1, 2 here, and another 1, 2, and then 3, 4, 5, 4, 5, or we have topped here only for wave 5 in orange and wave 3 in the yellow, and we're looking at A, B, C for your yellow here, and then still looking for a wave 5 towards the upside. In both case scenario, you would like, of course, to finish an ending diagonal here for an A, B, C, in case, of course, it is an expanding flat, or if you are in a wave 1, probably finishing or starting a leading diagonal actually here, and then 2, and then 3, 4, 5, or it could be even 1, 2, 1, 2, 3, 4, 5, 4, 5. So that is 2 bearish scenario as well in this formation here of this price action. It can be double 1, 2, or it can be big wave 1, 2 as a leading diagonal. However, what you would like to see is, of course, a retracement from this price action as 5 waves up, 3 waves down, continuation, breaking, of course, this high level as a confirmation for an entry point, or in case you dive deeper to the 1.618, you would like to see the same happening, but starting from this level, and entry point, of course, will be this area. And so if we take a look as well on the KGT for the 5-minute chart, as you can see, we don't have any bullish signals. Well, we have a buy signal here, guys, but as you can see, there is no CVDs divergence. There is no divergence What you would like to see here, of course, that is good. It is a lower CVD bullish signal, but on the price action, we see also a lower price action, while this should be higher than this point here with this signal. So that is no divergence, and by all means, it's a weak signal. It's a weak bullish signal, where we saw, of course, the price coming back and coming back down every time, while the bearish signals, as you can see, we have a very clear convergence between the tops here with the signals and this signal on the top. We see a very clear convergence between those signals and the price action, bringing, of course, this price towards the downside and still looking towards the downside, of course. And it is not possible to get a bullish signal or really good bullish signal before this CVD lines gets, of course, lower than this part and getting a new bullish signal. That means the price action will have to move toward the downside in order to get a very good bullish CVD here, and to say that we are moving towards the upside. By all means, our scenario as contracting diagonal is working well here, and KGT tells us that yes, we are still expecting a wave 5 here after finishing a wave 4. As you can see, your wave 4 was a zigzag as an A, B, and a C, and now you're expecting the same as a zigzag for your wave 5. You have finished the first impulse here, A, B, C, probably A, B, and then 1, 2, 3, 4, 5 for your wave C towards the downside. Probably we want to hit the 90,000 or the 1.38 fib level, of course, at 90,800. That was it for Bitcoin. Thank you for watching. Thank you for your likes and comments. See you in the next one. Bye bye.